Good evening and welcome to my S&P 500 end of the week recap. Another interesting day here for the S&P as well as Apple. A lot of other names got bid up and it works out really nicely if you're in a long swing. So um, first of all, I am still in half position of my 29 March 282 calls here. I did get in those way back here at 27. I was going to close everything out on this gap down, but had plenty of time. I liked the price that I had on them. Never even came down close to break even, so held on to those, and they're now up to, I think they closed at $1.27, $1.30 today. So still holding those. Looking forward to hopefully catching another swing up for this week. We'll see what happens. Now, what happened as far as price action goes for the S&P 500 on the open today is very interesting. Most likely shorts got trapped on the wrong side of the trade. There's a combination of things. Not only did shorts get trapped, stops were probably right above the close on Thursday. Was hovering right around this resistance zone. As you can see, I had this red block over here pretty much all week. Price just chopped around it. Had a false breakdown down here. I was talking with some of the guys in the trade crew chat room, explaining to them, what a trap looks like, and I was just on a smaller time frame. The trap was actually set much bigger than what I was looking at. So as you can see, here was the resistance zone, a little bit of a bearish strength on the 6th. The 7th actually had a breakdown and closed below this resistance zone, tested and pushed down, which could have implied that there was some significant amount of strength to the bears. Then towards the end of the day, you can see sellers looked like they were trying to hold it down again. Now on Thursday, price action actually gapped up above and held above that same resistance zone. So bears had a decision to make. Were they going to get in, or excuse me, were they going to hold and see what happened, or were they going to add to their position and hopefully it went down? And it looks like, based on the volume on Thursday, no real positions were closed. There was not a lot of participation, so they were probably sitting and waiting. Friday, you can see there was a tremendous amount of volume here in relation to at least the past 6 or 7 days. Well, excuse me, 1, 2, 3, 4, 5 days. Volume spike and a nice strong move up. So in addition to natural buyers, algorithms probably buying as well, as the 8 EMA crossed the 21 and then continued to cross the 50. And a nice push up above what was a temporary trend resistance. So a lot of levels broke, closed out the bearish stops, and brought in some new buyers, it looks like. So that's basically what happens when you have a lot of participation on one side of the trade. And just like with Apple, a big move up like this, always double check the volume. As you can see down here, there is participation, so this move is at least confirmed. Now, what's going to happen going forward, really don't know. Just kind of have to be patient, but I will draw one level on here, which is simply that point right there, which is about 279 roughly. This is very close to where the previous breakdown level was from over here in January, when price action started to really roll over. You had the initial sell-off up here at highs, a little consolidation right here around 280, and then ultimately the crash that we all saw. So we'll see what happens as price action does come up to there. Normally, when you have a significant level like that, you'll see volume drop as price comes up to it, because the bears will simply sit and wait to see if they can get as close of a risk to reward trade as they can. So volume being high and a move up, it looks like there is participation. As I said, there's confirmation that the move is legit and should, or at least in my opinion, probably come up here and at least test these highs. So that's why I'm holding my swing position in those 282s. Hopefully it comes up here, gives me a nice little extra bonus, nice little payday, and then I can close it out at highs. So we'll see what happens going forward there. If it does pull back in, I will still hold those calls. I'm looking at a couple of levels here. This trend line right here coincides with this white line on the daily time frame. Anytime a triangle does break, a lot of times price action does come back down to it and test it, just for a nice little dip below, catch some stops, market makers reverse, turn it back up, and start going back on their merry way. Do have a gap down here to fill around 274. This also coincides with the apex of this triangle. Again, with triangles, it's another area that does like to be retested, is the apex where the top and bottom trend lines come together. So levels to keep in mind right there. Also have my 8 EMA, 50 SMA, and 21 EMA all right here. So now I do not have a resistance box here. I actually have a support box. So Should be, or at least in my opinion, a lot of buyers in those regions, and we'll look for support entries at those points. If it comes all the way back down through here and tests the bottom end of this triangle, I want to see a much stronger support, maybe on a 15 or 30-minute basis before I actually take any more swing trades. So right now, back to being bullish for the SP 500. As you can see, this flag still looks like it's going to play out, even though it had a little false flash up, false breakout, false breakdown. Caught a lot of traders on the wrong side. Now it may come back up here and test these all-time highs. So just have to wait and see what happens. That's my take on price action for the S&P and my plan for Monday. Have a good weekend and good luck.